7 o'clock tonight right here on WNYC. Bridget, thanks so much.
Thank you, Sean.
It's WNYC. Coming up next, it is Marketplace on the show tonight. As economic headwinds continue to face the U.S., some investment analysts are advising investors to take the profits.
When an analyst says that investors should consider taking profits, it's really a sell signal. They're really telling people to sell, but they're trying to do it in sort of a market etiquette way.
Is it time to sell? That story coming up next on Marketplace. We'll be back with all things considered at 7. 77 degrees right now, low of about 65 tonight. It's WNYC at 6:30.
Join New York Public Radio's Community Advisory Board for a listener-led conversation about the issues that matter to you most. Wednesday, June 17th at 6:30 p.m. via Zoom. More at wnyc.org/CAB.
If you believe democracy requires a free press, your station is WNYC, 93.9 FM and AM 820, NPR News and the New York Conversation.
Marketplace is supported by Raymond James, wealth management, banking, and capital markets solutions inspired by people. That's the power of personal. Disclosures at raymondjames.com.
Hey, so here's a question. What do strawberry jam and stock market analytics have in common? Stick around. We'll tell you. From American Public Media, this is Marketplace.
Marketplace is supported by Sendoso. Sendoso helps teams launch gifting and direct mail programs at scale to connect with customers and prospects in a personalized and human way. More information is available at sendoso.com. And by Fisher Investments. As a fiduciary, Fisher Investments is obligated to act in their client's interest. Learn more at fisherinvestments.com. Investing in securities involves the risk of loss.
In Los Angeles, I'm Kai Risnell. It is Tuesday today, 9 June. Good as always to have you along, everybody. The strawberry jam comes to us from the J.M. Smucker Company, to which we will get in just a second. The stock market analytics come to us from Bank of America. The setup comes from us, and it goes like this. These are, broadly speaking, heady days in the equity markets. Record highs practically every time you turn around. Everybody you can think of is filing to go public, and trillion-dollar companies are basically table stakes now. However, Bank of America is singing a different tune. In a note last week, B of A, which I should tell you advertises with us, said there are, and this is a quote, too many red flags, end quote, pointing to a market peak, and that it is time to, again I'm quoting because these words matter, take profits. So, Marketplace's Henry Epp gets us going.
Stock market analysts don't really speak in plain English, so when they recommend investors take profits,
They're really telling people to sell, but they're trying to do it in sort of a market etiquette way.
James Weston is with the Rice University Business School. Bank of America declined an interview request. In the report, its analysts offer a couple reasons why now might be the time to sell. One, there are concerning signs in the real economy, says Weston.
We're seeing worsening fundamentals in consumer spending. We're seeing worsening fundamentals in consumer indebtedness. We're seeing a big rise in the price of oil.
Two, the value of publicly traded companies is really high right now, especially tech companies. Derek Horstmeyer is a professor of finance at George Mason University.
When we talk about valuations of companies, we usually measure it based on the price of the company to their earnings. And right now, that's at a very high point.
Some tech company shares are really expensive given how much revenue they actually generate, which could mean investors are being overly speculative or that the market is nearing its peak, which is why you have analysts saying it's time to take profits. The problem with making that call, says Ben Carlson at Ritholtz Wealth Management, is it's really hard to get right.
There have been people who've been trying to call the top on this for 10 years now.
But the market has just kept rallying. So yeah, this might be the moment the stock market hits its peak, or it might not. Larry Adam is at Raymond James, another marketplace underwriter.
So until we see major fundamental changes to the economy, to corporate fundamentals, to what the Fed is going to do. We would not recommend making major changes to a portfolio right now.
For those who do think it's time to sell, there's a risk in saying that out loud, says James Weston at Rice.
If you tell everyone to sell and everyone all sells at once, that triggers a market crash.
Which is why analysts use language like take profits. I'm Henry Epp for Marketplace.
Wall Street on this Tuesday, there was a little profit taken. Actually, we will have the details when we do the numbers. You were promised strawberry jam, so strawberry jam shall there be. Smucker's, home to Folgers Coffee, Hostess Twinkies, of course, and the aforementioned preserves, reported results today. Net sales up 4%. Uncrustables, it turns out, those frozen PB&Js were a standout. But the company said the year ahead is not going to be as good because of, and this is a quote, I'm doing a lot of quoting today, a dynamic and evolving external environment. And as Marketplace's Stephanie Hughes reports, that's an affliction common to a whole lot of packaged goods companies.
One big challenge for packaged food companies, Americans are kind of leaning away from eating packaged food. Craig Raleigh is a partner at the consulting firm Korn Ferry.
Many people are thinking about healthier foods, walking away from processed foods.
Also, a growing chunk of the population is now taking GLP-1 drugs, which means they're eating less food generally. And Raleigh points out people who are feeling stretched financially are more likely to trade down when they're buying a jar of jelly.
Many of these people are going to buy the grocery store's private label brand, which can be 10, 20, 30% cheaper than a national brand.
Raleigh also points out the war in Iran and the high price of oil has pushed up companies' shipping costs. Meanwhile, climate change has thrown a wrench into growing some of the foods that go in these packages.
Everything starts in the ground. Even a Hostess Twinkie, starts in the ground.
Phil Lempert is a food industry analyst.
If you look at what's gone on with coffee in Brazil because of climate change, you look at what's gone on with bananas.
Bananas are susceptible to higher than usual temperatures, and coffee crops in Brazil have been hurt by drought.
Just about all our crops globally really have to be reimagined.
Meanwhile, on-again, off-again tariffs mean company leaders have to make decisions in an ever-changing environment. Ed Johnson is with Deloitte Consulting.
3 different tariff regimes in the last 12 months have made locking in cost for a lot of packaged food manufacturers next to impossible.
Johnson says to plan for the future, companies are doing lots of scenario planning. For example, envisioning alternate supply chains.
It's all about trying to plan for the different options or different potential outcomes on the variables that you're aware that are in flux.
Johnson says packaged food companies have had to do a lot of this kind of scenario planning since the pandemic. So while it might be stressful, at least they're kind of used to it. I'm Stephanie Hughes for Marketplace.
We talked yesterday about how more people are going to the movies. It turns out that Cinemark, the theater chain, says it had its highest ever domestic box office last month. That was driven, at least in part, by the runaway success of indie horror films like Obsession and more recently Backrooms. And yes, of course, the big studio movies, Michael, The Devil Wears Prada 2, you know them as well as I do. You will not, however, have found all of those films at the Belcourt Theater, a nonprofit film center in Nashville, but still, we thought this was a good moment to check in with Stephanie Silverman. She is the executive director there. Stephanie Silverman, how are you?
Kai Ristall, so nice to talk to you.
It's been too long, and it's my bad. I apologize.
Always glad to catch up whenever you have a minute.
How are things at the Belcourt?
Things at the Belcourt are pretty good. It's starting to heat up. The summertime is rolling in, and this is a pretty stacked summer of movies, so we're pretty excited over here.
What's playing right now? What are the biggies you got going?
Well, right now we've got I Love Boosters. We have been doing a fun series around Twin Peaks, bringing the television series back, but putting it on the big screen. Huge crowds for that. But we're really like in the run up to Disclosure Day, Spielberg's big new movie. We've got the Odyssey coming up.
Yeah.
And then, you know, we do our Belcourt thing, which is like we got these great new movies, but then we wrap everything with awesome repertory programming. So we're doing a bunch of summer epics to go around the Odyssey and just a lot of reasons to stay out of the Nashville heat, honestly.
Let me ask you, not that you're always thinking about business, but let me ask you about the not arts part of your business, but about the actual, you know, selling stuff on scene part of the business, concessions and all of that. I imagine your cost of goods sold is up just like everybody's.
It sure is, pretty dramatically. You know, we work really hard to keep affordability as kind of part of our mission, but it's, you know, it's getting tougher out here. The cost of goods is putting a hurt on us for sure.
What's the ticket price? I mean, if I go to the multiplex around here, as you know, I'm paying $1 zillion.
Yeah, our top ticket price is $13.50.
Nice.
And then if you're a Belcourt member, you're paying $9.75 to come to the movies. So like we want this to be an accessible place. I think one of the things that's kept us thriving through recessions and other tough economic periods is that we're still accessible in terms of that kind of baseline price point for entertainment dollars.
Yeah. Are you, you know, you're a nonprofit, right? You go out and raise philanthropic dollars. How is that for you?
It's good. We are seeing a lot of generosity from individuals. I would say a little more challenged on the government funding side of things, the foundation side of things. But the flip side is we're seeing a lot of generosity from our audiences. And that's, at the end of the day, the most sustainable and meaningful giving for us. We have more members, for instance, than we ever have had in the history of the Belcourt.
Which is how many members?
Like we're about to hit 8,400.
Oh, wow.
So, you know, that's 8,400 Nashvillians, or at least people from the region, putting money on the table and saying, you're an investment that I care about, Belcourt.
Yeah. Talk to me for a second about, you know, Backroom and Obsession and that versus some of the, you know, the sequels and the IP movies that came out this weekend to, as near as I can tell, sort of meh, box office, right? But, you know, you got these new young people directing movies and stuff. Talk to me about that. That's got to be heartening to you.
It's the most exciting thing that's happening. I mean, to see these movies come out of the gate with such energy and such enthusiasm is really exciting because, I mean, this is a business at the end of the day, and those ticket sales talk to the studios, and the studios are the folks that we need investing in new voices, in truly original filmmaking. You know, so to see the successes last year of films like Sinners and One Battle After Another rolling right into these new genre movies, that's telling a story that is pretty undeniable and frankly incredibly exciting from our point of view.
Last thing, and then I'll let you go. Have you seen the trailer for Odyssey yet?
Oh, yeah.
All right. So look, I've got some misgivings. I got to tell you, I'm not sure I'm buying Matt Damon in that role.
I will just say, I also got to see some footage at CinemaCon.
Yeah.
I was blown away. I think it's going to work out.
All right.
Fingers crossed.
I'm going to call you back if I don't like it.
I mean, I know you got thoughts, and I appreciate them, and I will be excited to hear them, but I am optimistic at this point.
Stephanie Silverman, she runs a Belcourt Theater in Nashville. Stephanie, thanks a lot. It's really good to talk.
Great to talk to you, Guy.
This next story, I'm just telling you in advance, is really going to set some people on edge. Fitch and Moody's, two of the big ratings agencies, were out with new judgments on the oil and gas sector this week. If you think about it, you can probably see where this is going. The oil shock from the president's war with Iran has Fitch upgrading oil and gas to improving from neutral because of higher oil prices. Moody's kept its positive outlook and said corporate earnings in that sector are going to be even higher. Marketplace's Elizabeth Trovall has more now on big oil balance sheets.
I want to take you all back to a much different time and space. Think Bad Bunny's Super Bowl performance and the Winter Olympics. February 2026. Back then, oil companies weren't exactly in a celebratory mood.
The expectation was for oversupply, so there was an anticipation of the crude oil price languishing in the $55 to $60 a barrel range.
That's Andrew O'Connor with Morningstar DBRS. But instead of languishing, the war in Iran changed oil and gas markets overnight, and it wasn't a 1 or 2 week blip either. The now months-long crisis has meant substantially different outlooks for companies. Dan Pickering is with Pickering Energy Partners.
In 2025, West Texas Intermediate oil prices averaged $65 a barrel. So far in 2026, they've averaged about $85 a barrel.
In other words,
these guys are selling a product that's gone up, a third in value year over year. And so they are making a lot more money by simply doing more of the same.
And it's not just crude oil prices that have increased.
Across the barrel, across the product suite, prices have risen.
Liquefied natural gas prices are up, along with jet fuel, diesel, and gasoline. And North American oil producers have been especially well positioned to benefit from all of this. Andrew O'Connor again.
They're a long ways from the conflict, and then the refiners that are located in North America are also benefiting.
And looking ahead, it's not just that oil and gas companies are doing well now. Thomas Lyles is with Rystad Energy.
We do foresee elevated prices over the next 2 years, without a doubt. I think that's pretty much baked into most forecasts at this point.
So more cash than expected for these companies next year, too. I'm Elizabeth Troval for Marketplace.
Coming up.
You don't pay the duty and tariffs at that point in time.
Been a while since we've done a tariff story, but first, let's do the numbers. Dow Industrials up 86 points today, 0.2%, 50,872. The NASDAQ down 250 points, that's 1%, give or take, 25,678. The S&P 500 dipped 19 points, 0.25%, 73 and 86. J.M. Smucker, it of the preserves, picked up 10 and 0.4% today. General Mills up 1 3/4%. Kraft Heinz crept up about 1/3 of 1% today. Millions of sports fans are watching the finals between the Knicks and the San Antonio Spurs this week. Also, no doubt, many of them, perhaps also you, are betting on the series. DraftKings, one of the biggest sportsbooks companies, improved 11 and 3/10%. Flutter Entertainment, which owns FanDuel, expanded 6 and 1/10%. Bonds up, yield on the 10-year T-note down just a bit, 4.51%. You're listening to Marketplace.
The Numbers is supported by Odoo.com, your entire business on one platform. Marketplace is supported by GEP. As companies navigate global supply chain challenges, GEP works to help business optimize value and reduce risk through procurement and supply chain strategy consulting, services, and its AI-native platform, GEP Quantum Intelligence. And by Viking, dedicated to bringing travelers to the heart of each destination with small ship, river, ocean, and expedition voyages, offering cultural enrichment and immersive experiences. Discover more at Viking.com. And by Fidelity Investments, a dedicated advisor can help build a flexible wealth plan. Learn more at Fidelity.com/wealth. Investment minimums apply. Fidelity Brokerage Services, LLC.
Most Americans are frustrated with the news.
To me, Fox News they don't tell the whole story.
I'm not particularly interested in MSNBC.
And that's where I get irritated and not want to listen to it.
But what if we're wrong about what's really wrong with journalism? The cracked foundation of the Fourth Estate on the next Reveal. Tonight at 9 on WNYC.
WNYC is supported by
Capital One City Parks Foundation Summer Stage, presenting the Met Opera Summer Recital featuring Emily Pogorelk, Joshua Blue, Edward Nelson, and Dimitri Dover on Monday, June 15th in Central Park. Open to all. More at summerstage.org.
You're listening to Marketplace here on WNYC. Coming up in the 7 o'clock hour, it is a debate between the members of the Democratic Party in the race to replace Congressman Jerry Nadler, representing much of Manhattan. That's coming up at 7 o'clock on WNYC.
This is Marketplace. I'm Kai Ryssdal. It's been, well, let's just say a very long time since I've written a cover letter. You know what I'm talking about, right? Dear hiring manager, I'm the perfect candidate for the job opening you have in blah, blah, blah. Well, it turns out cover letters are just one more thing in this economy that's getting disrupted by AI. Anna Alchek wrote about it for Business Insider the other day. Welcome to the program. It's good to have you on.
Thanks for having me.
Tell me, would you, how you came upon this story?
Yeah, so this story actually, I got the idea about it about 6-7 months ago. I was at an AI conference and I was sitting next to a Wharton professor who was telling me about his struggle with hiring research assistants at UPenn. And he was basically saying that he has received, these email cover letters from students, and they're the best he's seen yet. And they all seem like they're written by AI because they're all exceptional. And so he was having a really hard time being able to decipher which was actually top talent, from the ones who just plugged it into ChatGPT and were sending similar emails to other professors. So he was facing this hiring issue. And I thought it was really interesting back then. And as time went on, I've heard more. We covered a story about how, resumes are being deprioritized. And that made me think wow, the cover letter is probably long gone at this point.
We will stipulate here that cover letters can be painful to write. They're no fun. And obviously with ChatGPT or AI system of your choice, you just crank them out. So it's not just a quality thing, right? Because you can see when stuff is written by AI and everybody knows it. It's also a quantity thing, right? People are getting drowning in cover letters.
Yeah, definitely. I think hiring is up, or, the number of applications that hiring managers are getting is definitely up. People are applying to more jobs on average. And so, even this professor I spoke to, he's seen a 20% increase in the last year. But so if you're getting more applications and all of them are top tier, it becomes really difficult to tell which ones are the actual top talent that you're working with.
This Wharton professor, as you say in this piece, was hiring 4 or 5 people to be his research assistant. But there are companies, and, not even huge ones, but have to hire dozens, hundreds of people. What are they doing?
Yeah, so the companies that I heard from, for example, BCG.
Boston Consulting Group, right? Big company, consulting company.
Boston Consulting Group. They stopped requiring cover letters about 10 to 12 years ago in North America. But nowadays they're doing more behavioral assessments and personality tests. And, so they're adding different tests to the hiring process. We also know that a lot of companies are now asking for verified skills. And we saw that LinkedIn, rolled out this year, they rolled out their verified skills. So basically candidates can, take these tests and show their AI skills with different apps. So I think in this era, employers really want to see your work. They don't just want to read about it in a resume or a cover letter. A portfolio. Those kinds of things are definitely becoming top of mind for hiring managers. They want to see you actually do your work.
Right. That's actually super interesting. This is none of my business, but did you have to write a cover letter to get this job at Business Insider?
I got this job 2.5 years ago, so I did have to write a cover letter, and I actually I really worked hard on it. Yeah. And I think in journalism too, it's not going away probably because it's such a writing heavy industry. So no luck there for me. But in terms of everyone else, I think that it's definitely not as prioritized in this day.
Anna Alchek at Business Insider. Anna, thanks a lot. I appreciate your time.
Thanks for having me.
Just as for every action there is an equal and opposite reaction, so too for every law there is a loophole, or perhaps several. For tariff law, one of the big loopholes comes in the form of what are known as foreign trade zones, FTZs in the lingo, legally defined areas, usually near ports and airports, that are, generally speaking now, outside the reach of U.S. customs, and which have historically let companies import goods tariff-free, then use those imports to manufacture their own products with lower tariff rates or even no tariff rate at all. I said historically a second ago because last year the Trump administration closed that particular loophole. Marketplace's Justin Ho has our story.
About a year ago, Aaron Stinner was trying to find a new location for the bike frame manufacturing company he runs in California.
We needed a bigger space. We were getting a lot of influx of potential clients for manufacturing here in the States.
Stinner Frameworks was facing threats of tariffs that could have been more than 100% on the components it imports from China and Taiwan. So Stinner's plan was to set up his new location in a foreign trade zone.
That would allow us to manufacture the frames here in the States, bring components in from outside, assemble the bikes within the FTZ, and then when it leaves the FTZ, have that then be released into the at least North American market tariff-free.
Then the Trump administration changed the rules. Stinner wouldn't be able to use the FTZ to reduce or eliminate his tariff bill, so he pulled the plug on setting up shop there.
You know, for those of us trying to make stuff here, having a slight advantage in being able to do that would be great. At least put us on an even playing field. But when that's not even happening, it's like, well, what is the point here?
Some foreign trade zones have seen interest die down. Drew Rodriguez is with the Port of Hueneme, which oversees one in Ventura County, California. He says inquiries about the FTZ surged after the Trump administration's big tariff announcement last year. But so far this year, only a handful.
If people were interested when the tariff craze and hysteria was taking over, they would have already reached out to us by now, where now they know this either works for me or it doesn't work for me.
There are plenty of instances where FTZs still make sense. Jessica Miserandino is import manager with AFL, a company in Duncan, South Carolina that makes fiber optic cables. It imports a lot of optical fiber from Japan.
We have a site in Duncan that is approved as a U.S. foreign trade zone, and all of our manufacturing operations are within that foreign trade zone.
Miserandino says the FTZ still offers advantages because when you import goods into it,
you don't pay the duty and tariffs at that point in time. You don't have to pay them until you actually manufacture the goods and ship them out of your zone.
Miserandino says that gives the company more flexibility to deal with tariff bills that can run to hundreds of thousands of dollars.
Especially while you're waiting to see what happens with these tariffs. I mean, maybe you want to bring in some material and hold it because you don't know if they're going to go up. You know, you don't know what's going to change day by day at this point.
Being able to delay tariff payments allows businesses to invest that money elsewhere. Ryan Toohill is Director of Community and Economic Development with the City of Phoenix.
Looking at the companies that are operators within our trade zone, many of them are going through pretty significant expansions.
Toohill says those companies include semiconductor manufacturers, aerospace, and defense companies.
As businesses invest, that's more jobs for folks who live in the Phoenix region. Those businesses are generating revenue that is helping to support all of the public infrastructure and services that we provide as a jurisdiction.
Toohill says the number of businesses using the city's FTZ has steadily increased over the last several years, and so far this year, it's still going up. I'm Justin Ho for Marketplace.
Marketplace is supported by Solidigm, offering solid-state storage solutions optimized for AI with higher capacities, greater speed, and energy efficiency. Solidigm, AI data infrastructure built on a solid foundation. Learn more at storageforai.com. And by Odoo.com, offering integrated programs for sales, customer relationship management, inventory, and other business operations, designed to work together as a customizable software suite. Odoo, all your business on one platform.
This final note on the way out today, which I will preface by noting that the average rate on a 30-year fixed-rate mortgage last week was 6.48%, down a tad from a week earlier. That's from Fannie Mae. I mention it to get to this. The National Association of Realtors said today the heretofore moribund spring home buying season seems to have gotten a bit of a mid-season boost. Home sales in May up 3.2% from April. Jordan Manji, Zonil Maharaj, Janet Wynn, Olga Oxman, and Virginia K. Smith are the digital team. I'm Kai Risdall. We will see you tomorrow, everybody. This is 8 p.m.
WNYC is supported by